edition. My name is Claudia Eifert, and I have the pleasure today have with me our founder and CEO, Bill Rowell, live from Dubai. And I have the pleasure to be also on the call here with Ryan Messer, live from the fields in Texas. We just tried to get a connections for to see him on camera. Unfortunately, till yet, we have not achieved it, but I believe it's going to come in a little bit. So let's hope. But with that, I want to introduce, of course, everybody logged in, and because you want to know about the news, the updates, what's going on, what are we doing, how is this project going. We have a lot of new people on the call. They don't know nothing about Utopian Global, so we want to give a little bit, of course, understanding what we do here at Utopian Global, the ecosystem. That is what Bill Rowell, the founder and CEO, is going to share in the next few minutes, and then we're going to have Ryan Messer, hopefully with his camera sorted, coming and actually giving you all the latest update, what he is doing there in Texas, doing for you, of course, the token holders, and doing good, obviously, to helping all of us basically earn more money. That's what the bottom line is. So with that, Bill, it is a great pleasure to have you on the call, and welcome, and yeah, the stage is yours.
Well, hey, Claudia, great to be on today's call. Thank you for the invite. I've been away for a few weeks, being in Australia with you, of course. You're down there as well. And of course, Ryan Messer, our CEO of STORH, was there as well. It was great catching up with him. Great meeting on the Gold Coast, I should say. Let's move right into this. We're actually very exciting times right now, as everyone is aware. From the announcements, we finally settled on the STORH asset on the 1st of August, which is not that long ago. Actually, it's less than 2 weeks away. The legal settlement took quite some time, but it's all signed and sealed and done. And Ryan will be giving us some great updates later on in this call, as he's in Houston as we speak, and has some exciting news to give us there. But where does it all start? Well, it started actually about 10 or 11 years ago when I founded the company to be able to provide real solid assets in the form of gold and silver to our members around the world. In fact, that was started in 2008. I founded a Swiss company and worked very closely with Philip Judge, who's the founder of a Physical Gold Fund and speaks to the World Gold Council. And we're still in strong relationships with Philip today. And so is Ryan. He was down there in Kuwait with him recently, looking at a mineral project. So we've been in the marketplace a long time. And the core thing about us is to provide people with real assets, real tangible assets, not air, not theoretical ideas or concepts. We're talking about the real deal here. I've been in business since 1986, which is over 30 years now. It's hard to believe. You learn a lot, especially from your errors that you make and mistakes. But one thing for sure I've learned, especially since the dot-com boom, of course, is to invest in real tangible assets. And this is exactly what we do, with a really strong strategic long-term relationship with Ryan Messer and STORH. So Utopian Global is an ecosystem. It's an ecosystem that gives our members around the world another source of income. Really important in today's world. Gives you the ability to share our products and services, and you get paid another income. Real assets, gold and silver, I've spoken about, and we'll be speaking a lot about STORH tonight. And the asset we've purchased and the assets we're going to be purchased, and also the increased valuations of those assets that we've purchased to add more value and increase the STORH value. In today's world of uncertainty, I mean, I was looking at the gold silver pricing before what's going on in the world. Gold broke $1,500 an ounce, which is really just a currency exchange. The dollar had been weaker, gold is stronger. But silver is certainly a very, very exciting prospect at the moment. And but we're all speaking about real tangible assets here, which is really exciting. Gold and silver, as I was taught by Philip Judge, the bullion banker, may only be, well, actually, when he told me back in 2003, he said it may only be 3 to 5% of your paper holding. Now, in today's world where there's increased inflation, we're coming down to 0 interest rates. In fact, when I was in Australia, I saw actually from Brian York in Norway, a fellow Australian, he actually sent me this article. about Australia, how they just passed some law, and the Parliament did it very sleazily, I must say, and very quietly. 5 p.m. on a Friday afternoon, when Parliament was very, very quiet, they passed law where they're intending to ban cash transactions over $10,000. And the idea being, of course, is to discourage people taking their money out of the bank, because when you have zero interest rates, it means that when you have money in the bank, it's going to cost you money to have it there. So why would you want to have money in the bank if it's costing you money to have it in there? And much of the world today, they can't afford to increase interest rates. So this is a time to hold real, tangible assets, a basket, gold and silver, lots of STORH. STORH's going to add multiple things to you, not just real tangible assets, but also income-producing assets into the future as well. The energy sector is a $1 trillion energy sector, and most importantly, we have a very, very strong, experienced team that's engaged in that. And I first learned about this sector going back to about 2003, 2004. Actually, it's quite a bizarre story, because I moved out of the dot-com boom, where I was investing in ideas where people said this internet stock is a great thing. And of course, when bull markets are strong, you can make money pretty much on anything. But when markets stop being a bull and they move to be bearish, you find the companies you invested in, if they don't have anything of a utility or tangible value, the price goes south very, very, very quick. And that's why it's important to own real assets. And this is really what I learned from the dot-com boom, going into the energy sector in 2004, where I first met Ryan. I invested a significant amount of money into the energy fund back then. I mean, the world is changing. Now, many people look at us, of course, and say, oh, here you are, you guys are speaking about natural resources, oil and gas. Is that the future? Well, I must say, a lot of the research that I'd done, if we didn't have oil and gas today, we would not have the standard of living that we all enjoy at this particular moment. But this does not mean that the change is happening. A huge change is happening, and we believe in renewable energy. That is the future, absolutely clear. As it says here, did you know that by 2030, there'll be 140 million electric cars on Earth? And by 2040, every third vehicle will be powered by a so-called green electricity. So, of course, to build this technology, you need resources, you need minerals. And this is really where the opportunity during this transition phase from where we are today is going to benefit all of us. Because right now, we've actually invested in oil and gas assets at Raccoon Bend, and Ryan will speak about that. That's a core, relatively low-risk investment. It's going to do very well for all of us, no question about that. And at the same time, we're going to be moving into other areas in rare minerals, because an expanding world, a change of world where we go from fossil fuels to electric cars is going to need these minerals. And of course, we want to be engaged in that. And that's exactly what we'll be doing through the projects with STORH. It also says that we're going to need a lot of batteries and different things. Well, that's pretty obvious when it comes to electric cars, solar, wind panels. Anyway, all this growth is going to have to be, of course, met with resources and minerals. And also, it's quite clear, and Ryan knows this much better than me, is that regardless of actually the trend towards renewable energy, it will never 100%. In fact, many of the estimates say it may only be up to 50% ever be able to be renewable energy, because we'll always need to have the expansion of natural gas and oil products to be able to fill the expanding need of the energy sector. You can move on the slide, please, Claudia.
I have.
Okay, great. Yeah, it's a bit slower here in Dubai. Environmental impact. This is a very, very important slide. I mean, Ryan's is a man with children. He's had the pleasure of meeting his family in Australia. Wonderful kids. I've got children, of course. People out there with grandchildren. We all think the future is going to be, we have to think of the environment. So it is natural that renewable energy is the future. Now, mining historically has caused huge environmental impact. And even today, mines in many parts of the world continue to do that. But this is our opportunity. This negligence of the past of these mining companies is our opportunity. Now, Ryan was fortunate enough to head down with Philip Judge down to South America just recently, and he visited a particular site where for the last 30, 40 years they've been mining and causing decimation to the land, etc., with old technologies, and they didn't care about the land. You had toxins, cyanides and different things all leaching out into the water streams, affecting lead levels and things like that. Well, we have the plan through our particular team where we can go into these environments with a new technology. One thing, we can extract the minerals and create prosperity from that. But at the same time, for the prosperity, we put a portion of that back into, and of course, land reclamation. We actually take the state of the environment back to its original state. We clean up the environment. So this is a win-win situation. Of course, cleanups cost money, so it has to be economically viable. And with the technologies and the team and the research that they've been doing in Ecuador, where Ryan was, it's a pretty exciting project, and they're right in the process of now doing the due diligence. So these are some of the projects that we're actually looking at. But the conclusion is, yes, with today's technologies and a team that is conscious about the environment, you can certainly do good and benefit the environment and benefit the people of the world, at the same time look after the environment. And this is exactly our main focus of doing that with Utopian Global and the STORH team. The STORH difference. So these are the new slides for me, guys. You'll have to, it's just loading slow here. To me, let me just talk about STORH, because to me, this is the most exciting thing. I've been in business for over 30 years, but to me, STORH is the most exciting thing that I've come across in decades. I think the timing for this is absolutely perfect. The team is there, the projects are there, and of course, the need for people, just ordinary people like you and I, to be involved in projects like this where we can own real tangible assets and have the ability to actually generate multiple sources of income through these real tangible assets is very, very, very exciting. And that's where the relationship comes in with Ryan Messer. And as I said, I always say in business, business is people. And I've known Ryan since 2004. I heard about him back in 2003 and physically met him in 2004. We've been engaged in business pretty much ever since then. To be able to bring these projects through STORH and also his associated partners and consultants such as Philip Judge, it's a really exciting venture. So with that, I want to move over to bring Ryan onto the call. He can give us some updates of where we are with STORH, or what he's doing down there in Houston, and maybe go through the overall what the STORH assets actually we have right now, Ryan.
We can't hear you, Ryan.
This is always a bit of a challenge when you've got people in different parts of the world, but we're here now, Ryan. Over to you.
You can hear me? Okay. Sorry, plan B here.
We can. Thanks for having me. We can.
Always a pleasure. Yeah. So as Bill pointed out, we've got a lot going on at the moment, and I want to give everybody an update because truly some exciting things are happening. I know we're a bit delayed in our closing of this asset. It was quite a bit complicated from a legal perspective, but everything is done and it got closed on, as Bill mentioned, on August 1st. One of our primary objectives when we bought this asset, remember what I told everybody, right? We get involved in niche plays and we don't like to compete. And we like to buy assets that we can add value to. And one of the key fundamentals behind this asset, and this is a foundational asset for the company, is our ability to be able to increase its value through development. So this field's been around for 70, 80 plus years. It's going to be around for another 30 years. And what I love about it, and the reason why it attracted me 6-7 years ago when I tried to buy it when I was running the public company on the Australian Stock Exchange, was that it produces from about 33 different intervals, and it is on a salt dome, so it's really broken up under the ground. So there are a lot of opportunity to go exploit new reservoirs in the field. And so the team that's been involved in this project, who are friends of mine, geologist Pete, has been in the project for 12 years. And if you look at the history of the field, what I love about it is, you know, most oil and gas production you buy and it's on a decline, right? Because as you produce the reserves, you know, over time, you know, the production drops because, you know, reservoir conditions. And that's this particular field over the last 12 years, we've actually been able to increase the production. And that's through the development. That's these guys rolling their sleeves up, doing the hard work, getting the data, shooting the seismic, reprocessing the data, and really understanding the field. And that's what's so awesome. So we just drilled our first well. We literally closed, and about 3 days later, we drug a rig out there on site and have just run casing on that well. We had about 54 feet of net pay in multiple intervals, which really beat our expectation. I mean, we had a really good feeling that we were going to make a well out there, but it's quite phenomenal to have that much pay in one particular well. Not only that, but there are other intervals that are productive in other parts of the field that also exist in here. So there's could be upwards of about 60 something to 70 feet of net pay in this well. So fantastic. It'll be around probably for decades itself. So a great result for us. And then of course, what we're going to be doing probably today or tomorrow is dragging the rig out to the second location. So demobilizing it and moving it and drilling our second well. But just some other things too. Not only are we drilling in the field, which will increase our production, we're also going and doing a lot of recompletions and rework. So we're activating a lot of old wells, fixing pumps, fixing downhole equipment, all those sorts of things. So that all adds value to the company and future cash flow for the company. And as we re-rate the value of STORH, obviously it'll have an impact on the token price. And it may happen sooner rather than later, but we have yet to get to that point. But I can assure you it's moving, it's coming. So real quick, that was just sort of the update on Raccoon Bend, and we'll continue to develop it. But then, of course, you know, that was our foundational asset, or our first acquisition, or first big acquisition for the company. We bought 2 small fields earlier in the year. But now we're really going to move into what we consider more high growth and much more high potential in an area that we've been focused on for about 6 or 7 months, and that's plastics to fuel. For us, it's very simple. We are already the market for the fuel, for the oil that will be created by processing plastics. So you can take a big problem that exists all around the world. We can raise capital through our token. We can build these facilities and give these substantial returns back to our token holders, while at the same time, you know, doing good for the environment. So that's what we plan to do. We're already looking at our first site now. I'm in discussions with a few people on that. We're looking at a feasibility study on that, which will include all the permitting and all the processing. And then beyond that, we'll be looking at Central and South America to deploy locations. So a lot of advancement in that area, and of course, as we get closer and can prove that we've increased the value of the company, it'll have a huge impact on the token price. So that's really our plan. I mean, people ask all the time, okay, you talk about returns on the asset of 20+% internal rate of return just on Raccoon Bend. Year 1 would be nearly 30% return on investment for Raccoon Bend. That's to the company. So I want to make it very, very clear to people that when I talk about returns, I talk about returns from an asset perspective, because as the company obviously will have, you know, to raise new capital, to deploy new projects, and we plan on, of course, sending out dividends or distributions, as we'll call them, but we probably will hold some of that distribution back to reinvest and to compound our investment back into the company. I think the real value proposition for everyone is what we're going to be doing to the token price, because, you know, that's, to me, a lot more measurable in terms of growth than talking about a 20-something% return on investment. We had a call earlier with an accredited investor, a sophisticated investor, and he was like, look, the returns 20+% is pretty significant. Well, absolutely it is. I mean, but the field won't be doing that in 20 years' time. It'll be a bit lower than 20%, because over time the field will ultimately decrease in production, over the coming decades as we stop developing it. But for now, we're focused on continue to increase the production in the field to keep the returns high. And he understood this. The real value proposition is us executing on these projects and listing the token so people can get a 4, 5, 6, maybe even 10+ time multiple on their investment. That's the real value proposition for everybody getting involved in STORH, is us taking this from 25 cents to 10 euro. So I think I just wanted to touch on that point. Bill, just pull me up at any point when you want to redirect me.
No, it's a very important point, and that's why we've got these slides up here showing the different projects, because wherever we go, Ryan, we experience this in Australia as well as in the UK, and we'll be in Africa shortly. It's all about this, of course, and when you list on an exchange, I mean, you've got to be able to substantiate your asset value. So all the work that you're doing right now on this expansion of Raccoon Bend, and of course the expansion into the pyrolysis, the plastic recycle, the midstream, and of course also Ecuador, the mineral division. This is what will take the token value from where it is right now to 5x, or let's say 5x. Let's not talk 10x. If we get 10x, I'll be exceptionally excited, as many of the people on this call will be. But let's be conservative. Let's say 5x, because I know we're both comfortable with that, Ryan. This is really the key focus. Now, with that said, all these assets are going to be generating income. So when it comes to the point when we actually list this on an exchange, I might decide, as an example, sell a portion of my particular STORH tokens to reclaim back some equity, and leave the balance there to get a return on the internal rate of return. And that internal rate of return will still be a very good rate of return that these assets will be producing. So it's a win-win situation, but we just want people to think longer term, understand what we're doing here with the token valuation and the price. This is the key thing, and the revenues that we're only just starting to get now, these last 10 days or so, from Raccoon Bend, they're getting sown back into Raccoon Bend. You just said we did one well, you got 60 feet of pay, increased pay. I don't really understand that, but I'm understanding it's 60 feet intervals where there's reserves of crude, which is sellable to the market. And of course, in another 2 days, you're going to be moving it to another well. So, and these will pay. These discoveries are going to pay also for the next 20 years, which is pretty awesome. So we're adding significant value to the token valuation. Is that right? How you see it, Ryan?
Oh, no, that's exactly it. Exactly it. I mean, we're developing the field to keep the production levels up, and I mean, we've got 20-something to 30 prospects to drill within the field, and that's just based on what we know today. So no doubt it's an expanding resource in the sense that I'm confident we're going to be able to add hundreds of thousands of barrels to the reserves, if not well over 1 million barrels to the reserve base over time, just by developing the field. So if you think about what that means is, you buy the asset for X today, and it's still worth X in 6 years' time when we've recouped we've recouped our investment, and we've made a nice return on investment, and the asset's still worth what we paid for it, if not maybe more at the time. So just depending on the price of oil. But so for us, it's, this is a game changer. And again, it puts us in a totally different league than probably 90-something% of all the other, asset-backed or equity, tokens in the marketplace today, or not even tokens, just the investments that you see in the market. So it puts us in a total league, and we are set up to execute not only on our plastics to fuel process or plastics to oil, but our mineral reclamation and mineral recovery and land reclamation. I always get the two mixed. And no doubt that will be an Ecuador-based project. We're looking at one now. We've already sent a letter of intent to the owners of this particular project, and once we have more data, of course, we'll send it to the market. It's going to be quite substantial for what we're looking at. So, again,
a couple of things come to mind, Ryan. I just want to touch on these couple of points. First of all, of course, I mean, I get asked this, and I know that you get asked this as well, and probably every other person on this call. What if we started to earn revenues now from Raccoon Ben, why don't we just start paying out the distribution now? I think you've already answered that, of course. And the main thing is, of course, we could do that, but of course, by doing that, then to raise money to do these developments at Raccoon Ben, we need to have new money coming in, which means we'll delete the owners. You owners of STORH right now would own less. You'd be diluting the asset, and your payouts would actually reduce, because it means more shareholders in one sense would be coming in. That's to raise capital, correct, Ryan?
Yeah, that's exactly it. I mean, what we want to do right now is take the revenue and we want to put it back into development to increase the value of the asset. We'd only be shooting ourselves in the foot if we took all that revenue and made distributions today. But it is our plan to be able to do distributions by Q4 of this year. So sometime fourth quarter of this year, which is just around the corner, to be honest. So that's our plan. But, really, we've got to get ahead of some of these other projects, too. So we've got to use the new capital that's raised to focus on plastics to fuel and, of course, Ecuador. We don't want to miss the boat on the Ecuador project. I can assure you, we want to get in on the ground floor when the stock will be the cheapest in this company. So,
okay. And before my last question, of course, the other thing that I see with these discoveries that you've made now, even just in the last days, and you've got another drill happening in another 2 or 3 days, and I think another 4 before the end of the year, that in itself is probably going to increase the current STORH value, is it not, from where it is?
I believe so. As I pointed out, I'm not sure exactly when we're going to make the next adjustment, but it'll be sooner rather than later. Based on some of the results that we're having. But again, I've got to have it's all third party done. So this isn't just, we pull it from the sky and say, here's the new pricing. It's, we've got to have the reserve report updated and various things so we can get that independent net asset value study done, and then we'll affect the price. But
I mean, I love that it's an independent asset report. I mean, you're not pulling, pie out of the sky in one sense and saying let's make the price this. This is done by market valuations and estimated reserves by your third-party reserve test and all these types of things. The other thing I wanted that you touched on, which I think me as an investor, you're an investor in STORH as well, of course, Ryan, as everyone else in this particular call is, and if you're not, well, you should be, because this is damn awesome. But what I wanted to touch on is, of course, you mentioned the oil and gas pricing. And I mean, I've been involved in precious metals for a long time. I can remember silver at $4 and it hit 50. I can remember gold prices very, very low, and it hit of course 1900. And of course, it's much the same with other commodities as well, like oil and gas. So let's talk about your hedging proposition. I mean, primarily you have a deal with BP, British Petroleum, to protect our investment in STORH. And I think this is absolutely critical that people understand this. This is the level we're playing at here. So talk us about, because this is one of the major risks, even though there's a lot of downside on the particular investment in operational costs. It's a high margin operation. But let's talk about the protection of the asset and the revenues for our STORH members, Ryan. This is really key to me, and the others too, of course.
Sure. I mean, you've always got people that, there's always someone out there that thinks that the price of oil is going to be $10 a barrel. And there's always someone that thinks it's going to be 150 again or 140 again. I'm not a believer there. I think that generally speaking, the price of oil will remain somewhere between, high 40s and low 70s. But we don't want to take that risk, right? I don't want to risk people's investment and the credibility of the company and our future potential by letting it sort of float with the market pricing, because there's so much volatility in the world. There's so much uncertainty. All it takes is President Trump to a tweet tomorrow and the price of oil goes down, based off negotiations with China or the things that are going on in Iran. So, I mean, there's a lot can happen, and it can go the other way as well, right, where the price goes up. So what we've done to essentially reduce or nearly eliminate the risk or price risk out of this asset is we locked in a hedge with BP. You're right, British Petroleum. So we've got it was an extremely arduous process to go through, but we're set up now, and we locked in our hedge literally the day after we closed on the asset. So we locked it in with a $56 floor. So if it goes below $56, BP pays us. If it goes above, we basically can have all the upside in that. So if the price of oil does go to $100 a barrel, all we do is pay $4. So we'll get 96 if the market price is 100. So there's what's called a collar on it. So it's $4, and that $4 slides up the collar. So we still have tremendous upside. So we're not locking ourselves into a ceiling at, say, $60 or something. So we have all the upside left minus $4, and then of course none of the downside below 56. So pretty substantial for people. And you're right, it just goes to show you that we are a real company. We are prudent operators. We've been doing this for a long time. I've been in the business nearly 20 years, but I'm still a baby compared to some of the guys on our team that have been in their respective fields for probably longer than I've been on this planet. So
well, I've got to congratulate yourself and Randall on this hedge, because for me as an investor and yourself, of course, Ryan, I just don't like losing money, mate. So this is a really smart strategy, and I'm sure many of our store owners here, they understood what you said. It's very powerful what you've achieved. So pretty much we're protected on the. People ask you what's the risk when it comes to oil and gas prices. Well, we're protected on the downside, and we have a lot of upside. We have all the upside, except we pay $4, which is a sort of the collar which you've explained. And $4 is a cheap price to protect your downside, to be quite honest, because we're making good money.
Yeah. Absolutely. I like you, Bill. I like to sleep at night. So, and this certainly gives us that ability. And we can do it with other things too. I mean, when we're into production on our mine in Ecuador, we can do some various things there too to hedge against downside risk and market volatility.
Okay, thanks, Ryan. That's great information to all of us. I'll hand it back over to you for these current slides, Ryan, if you like, with Claudia's changing them.
Sorry, what's it?
Claudia, this is a slide which you've really touched on, Ryan. I suppose it really it just really shows the increase in the token price based on the asset accumulation that we've been doing. And of course, the next big one, of course, is the pyrolysis, which is going to be a major turnkey for all of us in the valuation. In there, you haven't actually included the Raccoon Bend asset improvements as what you're doing now. But that's fine. This is just a general slide to give the direction of where we want to get to.
That's it. Yeah, just a basic overview. And of course, things will move and change. Things may happen sooner. We may introduce other assets, of course, that aren't on this list, but just give people just a quick visual representation of where we want to take the company over the next sort of 12, 18 months.
Yeah, and 18 months is probably not a bad time frame. I mean, we settled on the 1st of August with Raccoon Bend. We have 2 smaller assets as well. And the focus is on the development of this particular asset. We're already in the second half of 2019. So primarily in the last 6 months of this, or last 5 months of this particular year, and the first 6 months of next year is going to be very, very important to what we achieve and grow and increase this token value. So we need all of you guys out there to dig in deep. We've got something great here. Get out there and share it, because we want to keep moving on this pyrolysis plant where everyone can benefit from. But it's very, very, very special.
You got it.
And guys, I have put, of course, the next slide up there for people, which touches on the membership packages, of course, the price on the brutto and the net token price. You touched on a little bit on the prior slide, but really what we look at when we sell those packages, obviously, for Utopian Global Network. So just to have in a nutshell again what this could mean if listed at €4 the token. So maybe you want to just touch on that.
Sorry, I missed that last part. You want me to touch on this?
That is correct. Or your Bill.
Okay, the slides just go ahead, Ryan.
Go ahead, Bill. No, you probably know this.
The slides just popped up here in front of us, and so Claudia, what's the question? Is it regarding the retail package price versus token ROIs, or is that what you're asking here?
Basically, I can also explain it there if you wish. I can do that. It's just about the packages and of course the estimation of returns, because people never understand the package pricing and what actually goes into store, etc. Just basically in a nutshell, what could be the potential upside.
Okay. Well, what we've done there is quite a simplified approach to the asset valuation, but as Ryan said earlier on, it can be much more complex if you're talking the income return on that. Primarily, the package price is actually the retail price, because when you buy a package, depending on the package you buy, a significant amount of that goes out into commissions, and of course you can't. That's not part of the investment. And part of that also goes to Utopian Global. So the people who are actually buying the larger packages, up to 96% of that revenues or their package price will go to STORH, which has actually contributed to the STORH acquisition of STORH asset acquisition, which is fantastic. But the smaller packages, of course, because our purpose is also is to be able to make smaller packages available for people all around the world, and also be able to generate another source of income through the commissions. Well, of course, there's no ROI. STORH cannot give a ROI, a return on investment, on commissions that are being paid out. So that's where it gets a bit complex. So all this was detailed in the white paper, of course. So people who read the white paper would actually know that. But this is where it can get a little bit complex, and that's why Ryan often speaks about, let's focus on the return on investment will actually. Whether it's 20%, whether it's 25% per asset, it could even be 40% for someone in the midstream. Ryan's spoken about that. But it's a complex analysis, because Ryan will come on and say shortly, I can see him thinking it already, it all depends at what price you raised your capital at, because some people bought STORH at 25 cents, some people bought STORH at maybe 40 cents, and some people bought STORH at a much higher price. I'm talking wholesale price now. And therefore, that's going to give a valuation to the asset value and the return on that per the capital raised. So it's quite a moving target. Now, as we raise more capital at a higher, like the price is €1 now, it's going to actually bring up the ratio, the ROI, as we raise more capital at a higher price. That's for sure. But what we're focused on now is making sure, as Ryan said, we want to get a 5x. He said 10x. When we know, we've both spoken about this many times, we believe that it's very, very feasible looking at the assets that we want to buy. Let's say we did 5 times our money in a couple of years' time. I think I myself, waiting 20% per year to break even in 5 years, you know what? I'll take my 5x in 2 years to 3 years, and I'll be very happy with that and move that money back into some other investments. So that's exactly what I'll be doing. Whether it be STORH 2, STORH 3, STORH 4, there's going to be many other assets to buy into. So I think the easiest way for people to talk about STORH is talking about, is the STORH valuation price. We want to get 5x. Now, the returns on the investment are going to be there. They'll become more transparent as we start to release the funds, because even in the Raccoon Bend, and correct me if I'm wrong, Ryan, if we're looking at starting to pay out in Q4 of this year, not all that money from Raccoon Pen is going to be paid out in distributions. We're going to be holding some of that back to actually fund other drillings and things on there. So people need to understand that as well. And it's the drillings and things, it's the expansion of these particular assets that are going to increase the asset valuation. Okay, and in time, of course, there'll be no more development needed on Raccoon Bend. So what do we do then? We just have all revenues that 100% going to be paid out to our STORH owners. That's the aim, of course, but we have to get to that point, and it's a journey to get to that point. So we have to be patient as well and understand what we're doing here. Do you want to add to that, Ryan?
No, I mean, I think you covered it extremely well. I mean, the whole point here is that no one's going to be able to calculate accurately based on some sort of, 20-something% internal rate of return number, because again, like you said, it's a moving target. We're constantly raising capital, and we've done it at multiple or at different pricing intervals. So it kind of comes down to the average cost of capital. I mean, there's so many calculations in there, I think. And I think, again, just to make it very, very simple for people, focus on the token price and being able to monetize it. But know that we are going to be doing distributions at the same time. I can't say exactly what the distributions are going to be, expressed as a percentage relative to your situation and when and how you purchase those tokens, because again, the commission structure is completely different from top to bottom, from the €1 million package all the way down to the €99 package. So it would depend on everyone's specific circumstances to determine exactly what that return on investment would be. So that's why we need to focus on the price of the token to articulate the story and the benefit of investing in STORH now, because obviously our plan is to create a multiple on that in the next 12 to 18 months versus, some 20 per annum sort of number.
And of course, the other complexity to this is not just the package price; it's also the price that each individual paid for the particular tokens at the given interval. So we just can't give a blanket answer. That's the whole thing. People are asking us for one answer. What is the ROI based on how many STORH tokens they have? The trouble is you just can't answer that from what we just explained, and this is where it gets very, very, very complex. Now, as you move further ahead, it will become more transparent. What will that be? We believe it's going to be very, very, very strong. We don't say these numbers for saying these numbers, but it's going to vary from person to person. It's not going to be equal in that sense, because it all depends on those particular moving factors that we just discussed. Let's get it to 5x. If we get it to 5x and we get it to 10x, well, we're going to be ecstatic. So, but 5x is great. Let's be conservative.
Yep, I agree. Good points, Bill. Thanks.
Well, great, guys. So, well, with that, basically, we explained, hopefully, for most of the people, which is the strategy. The strategy is to, when we talk, of course, to people, it's all about the token value proposition. So where we believe the token price is going to go based on the valuation of the assets. I believe, understand now what could be the upside potential on those different packages. We understand that as higher we buy in, obviously, as more STORH tokens we get, as a better price, meaning as more upside potential we do have. So what's next? Is stay excited, talk to a lot of people. We raise a lot of capital, because when you raise capital, it doesn't matter if you raise 99 or if you raise $1 million, that's all going to be benefit for everybody, and that is the whole point. So there's no competition. There's no, well, I need to know, well, I mean, we like to be competitive, obviously, but I mean, we all going to be benefiting from that, and that is really the point here, which is absolutely amazing. So when you buy STORH, remember, you help making mineral extraction greener or green, help the environment, and you earn residual long-term income for the production of those assets purchased from STORH, or a multiple when you cash in. So you can get premium packages, you can get quantum packages. Just go to the person who referred you to this website, who referred you to Utopian Global. I know we have it live streaming in many, many different channels. So talk to the person who invited you and get yourself educated. And let's get started. Let's go. We're going to see you soon live from Denver, Colorado, and I believe Texas, where we will be by next week. So it's always great to see many, many people and meet many people from all over the world. We have our African tour coming up. That is going to be basically half or 3/4 of September. We will be in Kenya, in Uganda, we will be in South Africa, in different cities. So if you have people over there, well, obviously invite them, get them to meet our founder and CEO, Bill Rowell, and of course, Ryan Messer, and learn more about what we do. And hopefully you will see what we see, and we hopefully see or we hopefully would think that you see the amazing vision those two guys here have for you, for the company, for the environment and everything. So with that, thank you guys. Again, I know there's questions coming, as there always are. I hope we have addressed most of those questions. There will be soon a release coming out, I believe, from the company, and of course updating you all the time about those developments which Ryan just spoke about, those new twillings, so that you stay tuned and stay updated. Lots of languages are in the play as well, so I believe we have something like 10 languages coming out as well, 10 languages in video. Most of them will be subtitled, so the main voiceovers will be in English and Spanish, but there's a lot of new things coming out for you, so obviously to make your life easier when you share this amazing concept. So I want to thank you, Ryan, and I want to thank you, Bill, for coming onto the call. I know your time is precious. I know, Ryan, you have a lot to do out there in the fields today. So thank you very much, and have a blessed day.
I think you're muted, Ryan.
Thank you. Appreciate your time, and I look forward to our next call.
We'll see you next week, Ryan, in the US. And as Claudia said, everyone, it's there's a lot of information to come out, but the information lags the activity. Ryan's busy there, and of course he can't give out the detailed information until it's all signed up for the reserves and of course the local drillings. He has to have all the right information, but you'll start to see a lot of information flow into you over the next couple of weeks, which is going to be very exciting information, which is really just adding to the value of the STORH token. So we'll see you next week in the US, and thank you so much.
Thank you.